The market is slowly recovering today. Palantir price is still in dire condition. Investors are skeptical. It's getting out of hand. But something big came up today. One analyst pointed out something odd. Wall Street might have made a big mistake. The Pentagon just dropped massive bombshells. And this flipped the whole script for Palantir, which might push its price to the heavens. What is happening? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir's looking a little rough today. Its price took another hit, dropping back down to around the $100 range. The only silver lining? It's actually a slight rebound from an even uglier dip the other day when it crashed below $100. It's slowly recovering. But yeah, it's still sitting in the red, and that's not exactly what investors want to see. What makes this even crazier is how fast things changed. Just days ago, Palantir was on fire. The stock was climbing, people were celebrating, and the price even touched $120. The hype was real. Everyone was pumped, thinking this was just the beginning of a bigger rally. But today, completely different story. The mood has flipped. Investors are on edge, some are panicking, and the excitement has turned into doubt. The bears seem to be in full control, pushing the price down, while bulls are left wondering if this is just a dip or the start of something worse. It's a dramatic shift in sentiment, and it's shaking up the Palantir community. The confidence that was there just a few days ago feels like it's fading. Some are holding strong, believing in the long-term potential, while others are questioning if they should cut their losses. It's the kind of volatility that keeps the stock market interesting, but also nerve-wracking for those holding on. And here's the kicker. Palantir has lost a massive $55 billion in market cap since its all-time high. That's a huge chunk of value just wiped out. No wonder investors are feeling uneasy. But wait, while some people are panicking and turning bearish, there's still a huge crowd staying optimistic. Not everyone is convinced this downturn is a bad thing. In fact, a lot of investors are seeing it as a golden opportunity. Some analysts believe this might actually be the last real chance to scoop up Palantir at a discounted price before it takes off again. One analyst even laid it all out on Twitter, saying this upcoming dip could be the final opportunity to buy below $100. He's convinced that with the major catalysts on the way, Palantir is on track to becoming a trillion-dollar company. That's a bold prediction, but he's not the only one thinking this way. Big institutions and whales seem to be preparing for something big. They know what's coming, and they're not hesitating to position themselves early. According to this analyst, $150 isn't just possible, it's inevitable, and it could happen sooner than most people think. And honestly, that's what makes this situation so interesting. On one side, you've got people panicking, selling off, convinced that the worst is yet to come. But on the other, you've got these long-term believers who see Palantir as massively undervalued right now. To them, this isn't the end of the rally. It's just a brief shakeout before the next leg up. If this analyst is right, missing out at these levels could be a decision people look back on with regret. It wouldn't be the first time a high-growth stock looked weak before making a massive move. And here's something even more interesting. Another analyst is hinting that a big reversal might be on the way. He's looking at the charts and wondering if an island reversal is forming, which could mean a major shift in Palantir's price action. He even said he'd love another chance to add more shares, which tells you he's not worried about the dip. He's actually hoping for it. According to him, there's a potential gap fill between $99 and $85, meaning we could see some more downside before things turn around. But the key takeaway? He thinks this setup should absolutely be on everyone's radar next week. So while some investors are stressing over the drop, others are zooming out, watching for that perfect moment to jump back in. If this reversal plays out the way some analysts are predicting, Palantir's current weakness could end up being just a temporary shakeout before a big comeback. But here's the thing. Let's take a step back and remember what actually caused this massive drop in the first place. It wasn't just random market movements. The big trigger? Donald Trump's announcement about cutting the defense budget by 8% annually. That news hit the Palantir community hard. People panicked, and for a good reason. We've talked about this before. Palantir relies heavily on government contracts for a huge chunk of its revenue. So when investors heard about potential budget cuts, they immediately started worrying about how much this could impact the company's future earnings. And just when things were already looking shaky, CEO Alex Karp made things worse by positioning to sell around $2 billion worth of stock. That move sent another wave of doubt through the market. If the CEO himself was offloading such a massive amount, what did that say about Palantir's future? Investors didn't like the answer, and the stock took a hit. So all of this combined, the budget cuts, the uncertainty about government contracts, and the CEO's massive stock sale created the perfect storm for a sell-off. But here's the crazy part. This whole budget cut situation might actually be good for Palantir. One analyst pointed out that while the market is panicking over an 8% defense budget cut, they're missing the bigger picture. The government isn't just spending less, it's spending differently. A massive $900 billion budget is being shifted away from outdated legacy contractors and toward cutting-edge tech, AI, automation, and real-time decision-making. And that shift? It's a huge tailwind for Palantir. Palantir's entire business is about making government operations more efficient. And with the Department of Defense now being forced to do more with less, the demand for its software could actually increase. And this isn't just speculation. Palantir is already deeply involved in key AI-driven Pentagon programs, like Project Maven, the Army's Titan program, and Space Force's satellite analytics. These aren't side projects. They're central to the Pentagon's modernization plans. And let's talk about military strategy. It's evolving fast. The future of defense isn't just missiles and tanks. It's AI-driven warfare, cyber defense, and autonomous decision-making. The Pentagon's Replicator program, which focuses on mass-deploying AI-powered military systems, proves this shift is happening now. And who's at the center of it? Palantir. Legacy defense contractors aren't built for this new era, but Palantir is. So why is the stock down? Because Wall Street still doesn't fully get Palantir. Investors are treating it like a traditional defense contractor instead of recognizing its role in the government's AI-driven transition. The Pentagon isn't cutting AI spending, it's doubling down on it. But instead of focusing on that, investors latched onto Alex Karp's stock sale, which fueled panic selling. The bottom line? Palantir isn't struggling in this new defense landscape, it's thriving. While old-school contractors drown in bureaucracy, Palantir is moving fast, delivering AI-driven solutions where they matter most. And as the Pentagon shifts toward efficiency, Palantir isn't just a good option. It's becoming essential. Wall Street might take time to catch on, but the Pentagon already sees it. Palantir isn't suffering from these budget cuts. It's benefiting from them. And if AI-driven defense spending continues to grow, this dip might not be a warning sign. It might be a massive buying opportunity. This is insanely bullish for Palantir. If anything, this shift in defense spending could be exactly what pushes the company to new heights. We've talked before about Wall Street's prediction that Palantir could hit $1 trillion valuation one day. And honestly, with how things are shaping up, that might not be as far off as people think. This deal is setting the stage for something big. And here's the thing. No matter what the bears say, Palantir keeps proving them wrong. Just like this analyst pointed out, the skeptics are completely missing the bigger picture. They keep focusing on things like the high price-to-earnings ratio or stock dilution, but they're ignoring what actually matters: the company's fundamentals. Palantir isn't just another overhyped stock. It has real-world impact, government contracts that are only getting stronger, and a technology stack that's becoming more essential as defense priorities shift toward AI. Most investors still don't seem to fully understand what Palantir is actually building. They're stuck analyzing numbers on a spreadsheet, while the company is out there reshaping the future of defense and intelligence. At the end of the day, Wall Street can stay skeptical, but Palantir keeps doing what it does best: winning critical contracts, expanding its influence, and positioning itself at the center of the AI revolution. And if that trillion-dollar prediction ends up coming true, it won't be because of hype. It'll be because Palantir has earned it. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money. So, don't risk it.
BlackRock finally breaks the silence. Let's not forget its massive impact on Shiba Inu. You remember how Shiba Inu tripled in price in just a couple of days? Well, looks like the story might repeat. The BlackRock with its billions of US dollars is ready for the next move. And that is a major win for Shiba Inu Army and the entire crypto space. But what is actually happening? And why am I being so bullish? Well, let's find out. Disclaimer, it finally happened. The BlackRock Bitcoin Trust has finally flipped the grayscale. Bitcoin Trust as the largest Bitcoin ETF following the latest round of inflows. This development has been catching our attention for quite some time. Just after the Bitcoin ETF was approved back in January, we saw Grayscale, an entity with significant Bitcoin holdings, start dumping millions of dollars worth of Bitcoin every day. This created substantial selling pressure, causing multiple market crashes and leaving many of the world's largest Bitcoin companies in the world. To understand how this works, here's something important. When a large entity like Grayscale sells off massive amounts of Bitcoin, it floods the market with supply, driving down the price. This consistent selling created a downward force on the market, resulting in significant volatility and downturns. This is where the BlackRock joined with its daily accumulations of Bitcoin. Unlike Grayscale, which was offloading its holdings, BlackRock maintained a 71-day streak of consistent inflows. Without any dumping or flat numbers, this consistent buying acted as a counterbalance to Grayscale's selling. It was like a tug of war. Grayscale was creating significant selling. Pressure with its dumps, while BlackRock was scooping up the Bitcoin, steadily increasing its holdings. And now, with BlackRock's holdings finally exceeding Grayscale's, the dynamic shifts. The selling pressure from Grayscale won't be as massive as it was in the past because BlackRock is now the top holder. Shiba Inu holders are very happy right now. For some reason, Shiba Inu is super sensitive to Bitcoin movements, often reacting more dramatically than it should. For instance, when Bitcoin dumped by 5%, Shiba Inu followed suit, but dropped even more, sometimes by 10%. And now, with BlackRock's victory over Grayscale, this is very, very good news for Shiba Inu holders. The significant selling pressure from Grayscale's Bitcoin dumps had a ripple effect across the entire crypto market, hitting sensitive assets like Shiba Inu particularly hard. With BlackRock's victory over Grayscale, this is very, very good news for Shiba Inu holders. With BlackRock now holding the top spot and consistently buying Bitcoin, the entire crypto market is likely to experience more stability. This should help mitigate the extreme volatility that Shiba Inu often experiences in response to Bitcoin's movements. As a result, Shiba Inu holders can look forward to a more stable market environment, reducing the dramatic swings that have been so common. BlackRock now holds Bitcoins worth a staggering $19.4 billion. Eric Balchunas, a well-known ETF analyst, has the story. He said, from Bloomberg confirmed BlackRock's achievement, emphasizing that this fund is on track to make history as the fastest ETF to reach $20 billion in assets under management. The current record holder is the JP Morgan Equity Premium Income ETF, which took 985 days to cross the $20 billion mark. Remarkably, the BlackRock Bitcoin ETF has only been trading for 137 days, including non-business days. To put this into perspective, the difference is astounding. Imagine running a marathon where most participants finish in around 900 days. Then, out of nowhere, someone comes along and finishes the same marathon in just 100 days. The sheer speed and efficiency are mind-blowing, highlighting just how rapidly the BlackRock Bitcoin ETF is growing compared to its predecessors. This incredible pace underscores the fund's unprecedented momentum and the significant impact it could have on the market. And here's something interesting. Eric Balchunas mentioned in his Twitter post that he was a big fan of the BlackRock Bitcoin ETF. It's official now. BlackRock Bitcoin ETF is king of the category, and prob will be for decades. The low fee, big boy liquidity, and these shares brand name is just too powerful. Although there's plenty of food for everyone. This tweet confirms that BlackRock's Bitcoin ETF has firmly established itself as the leader in its category. Eric predicts that this dominance is likely to last for decades, emphasizing the ETF's long-term potential. He points out three main strengths driving this success: its low fees, high liquidity, and the powerful issue's brand name. The low fees make the ETF cost-effective and attractive to investors. High liquidity means it can handle large transactions without significantly impacting the market price, ensuring smooth trading. The Ishar's brand name, known for its credibility and trustworthiness, further enhances the ETF's appeal. Even though BlackRock is leading the pack, Eric notes that there's plenty of food for everyone, suggesting that while BlackRock's dominance is clear, there is still ample opportunity for other players in the market to succeed. This underscores the robust and growing nature of the cryptocurrency ETF space. In addition to all of that, we've just hit 12 consecutive days of positive flows to Bitcoin ETFs. This is amazing, because in the past, Bitcoin ETFs often faced bumps in the road with periods of outflows or even flat activity. So now, seeing 12 straight days of inflows is a remarkable turnaround. This streak of continuous inflows indicates a growing confidence and interest in Bitcoin ETFs among investors. It means that more people are putting their money into these funds, betting on the long-term potential of Bitcoin and crypto in general. This positive trend suggests a bright future ahead for Bitcoin and its ETFs, as consistent inflows can lead to greater market stability and higher prices. The sustained interest and investment could mark the beginning of a more robust and resilient market for Bitcoin ETFs. And if you think that it only impacts Bitcoin, then you'll be wrong. As I have mentioned already, Bitcoin movements have a tight impact on Shiba Inu. This is probably one of the reasons Shiba Inu whales are going crazy today, because of all these good news. These positive developments could really mean that there is a bright future.